Good morning, traders. So here we are for the weekend update. It is January 7th, 2024 on Sunday. So happy New Year to everyone. These are the current open trades that we have going in the alert service. So just to run through these quickly, we've got our Google wheel strategy, which continues to chunk along just fine. Again, right now, the stock portion of this has taken a little bit of a hit, but of course, our covered call is going to be nicely profitable at this point. So, this thing has been through almost a complete cycle here. And if Google gets called away from us, I'll probably shut this down because there should be enough there now for people to know how to go through that process. That was the goal here. And of course, once I shut it down, I'll put it in the trade archives, those of you in the alert service, along with 100 plus other trades that you can go back and play through at any point. Then the rest of these are all broken wing butterflies of various configurations. And I like the way that we're positioned here. We've got a little bit of positive delta here, just an ever so slight amount of negative delta here, slight amount of positive delta here. And these are the three new trades that have been established here over the past probably 6 weeks. And more the trading style that I'm planning on carrying forward through 2024. There will be a video coming out within the next few days where I'm going to do a complete review of last year's results. We're going to analyze what worked, what didn't work, and then I'm going to kind of lay out a new 2024 game plan. It's not going to be significantly changed, but there's definitely going to be some changes that I think you're going to like in it based off the survey results. So be looking for that over the next few days as well. This particular trade is kind of a remnant of some of the things that I did last year, and some of these I battled them for too long. Some people wanted to see how these trades would be battled if you wanted to battle them. So I went ahead and battled them many times to my detriment. So I'm going to steer clear of that as much as possible here in the coming year. But this is one of those last remnants that is being battled. I will still try to battle this a little bit here this next week. I am not, just for clarification, I am not expecting to get this trade into a profitability state. But I do think I can reduce the loss on this from 300 to a lower number if, of course, the market kind of stays where it is and cooperates. So that's kind of the general game plan of the trades that are open now. And then if we take a look at our market, so the first thing I want to look at here is this is the SPX. This is a weekly bar chart. I want to kind of look at the big picture here first of the SPX. And we can see that our all-time high was hit back on January 3rd. Let's see, that would be 2 years ago on, let's see, was that 2 years ago? 1 year ago. That would have been, 2 years ago, January 3rd. We hit that all-time high of around 4,800. Then, of course, we went through a fairly significant pullback, COVID-related, etc. Then we rallied back, and then this was just a rip your face off rally here, which is what kind of stung us in Q4. But we rallied right back, as I was expecting, to that 4,800 range. And it seems logical that there should be a little bit of what we call backing and filling, a little bit of a pullback at that point. But what I did want to look at here, you can see these two gold lines here. So this is what's called Fibonacci's. I'm a somewhat practitioner of Fibonacci's. They're useful because other traders use them sometimes to analyze the markets. But what you look at with Fibonacci's is you look at the range that a run has gone through. In this case, roughly 4,100. This is the most recent wave or range I'm looking at, from about 4,100 to 4,800. And we put our two Fibonacci lines on there. And I like to look at the 50%. Now, many Fibonacci people will look at a 33.3% and a 66.6%. There's different Fibonacci numbers, but to me, the more finite numbers, the smaller segments, are a little less adhered to, if you want to call it that. So I look mainly at the big number, the 50%, as a possible retracement for this. So if we ran all the way up here to 4,800, and in typical Fibonacci fashion, many times you'll get a pullback that's about 50%. Now that also coincides here right around this 4,500 mark, coincides with a couple of prior highs in this ame and over here in this area. So bottom line is, I think anywhere from this, 4550 down to about 4450 is a likely area that our markets may pull back to. And that wouldn't alarm me in the least. And if I'm setting up trades right now, I want to set those trades up so that they can largely accommodate that general range. So if we take a look at the trades we have on and we look at around this 4,600 range, most of these are perfectly fine. I mean, this is going to take a little bit of a heat temporarily and a pullback to 4,600. And we may end up needing to adjust some of these if we get a pullback to 4,600. But for the most part, pulling back to 4,600 is not going to have a major impact on these trades. Likewise, if let me go to a daily bar here now, because these trades are going to be better looked at on a daily bar because they're not year-long trades. So here, if we were to pull back a little bit further, again, maybe down to this 4,600, I would expect probably a move up at that point. If we were to move up to 4,750, 4,800, these trades are just fine. This one will be profitable at that point, a small amount profitable, but we will adjust it to raise the wing to increase the profitability. This one would take a little bit, it would be profitable here, but it would have to be adjusted as well as things went further. This one, of course, at 4,800 is fine. It would be almost at full current profitability at that point. So that's kind of the way that these are set up. They're set up to handle a decent range. A couple other symbols, of course, we don't have anything on in RUT right now, but I wanted to take a look at RUT, and we can see that RUT has had a pullback. I would expect RUT to possibly pull back a little bit further here. I mean, it really ran hard in some of these breaks and gaps. I would expect, realistically, RUT to pull back here into this 1900 range, probably chop sideways a bit, and then rally back up from there. We can see if I were to draw in a trend line here. Let's see my drawing tools. Yeah, I usually do my drawing in other programs. Here we go, drawings. That helps. Drawing tools, draw a trend line. So, we can kind of see that there's a bit of a trend line that's kind of running right in this general area. So again, that kind of coincides with this 1925 area as well. So I would fully expect, RUT to maybe come back into this range and then again chop sideways or possibly rally off of that point. One other thing I want to take a look at is our VIX, our volatility index. So we can see that when our market started to rally in this Q4, when that massive run-up took place, all the fear dropped out of the market. VIX is a measure of fear. It's a measure of how many people are buying protective puts or buying insurance on their positions. And when our market started running up, this is after the Fed kind of signaled that, hey, we're not probably going to move rates up anymore. In fact, we may move them down. That's essentially when this whole process started. The fear dramatically left the market, and we got down to lows in VIX that we haven't seen in years. Now, that's if for your long-term buy and hold accounts, that's good. If you have investment accounts, IRAs, etc. From an options trading standpoint, not so good. When people are not paying up a higher price for options, we don't get as much premium as options sellers. Not only that, but because we're not getting as much premium on what we are selling, if the market shifts while we're holding that bag of premium, it can be more traumatic to us. In other words, it can be a little more painful. Those of you that have taken the deep dive butterfly class, we get into that fairly significantly there, and we talk about why in lower volatility positions we may need to carry a little bit lighter load of positions. Because you really don't want a full load of positions when that market shifts from low volatility to high volatility. So here a couple days ago when volatility was up, it wasn't up significantly, but it was up a little bit. That's when we added one of these last butterflies in that you saw in our open positions right now. So that kind of gives us a look at volatility. It's going back down right now. Obviously, there's a lot of political things happening in the world right now, and any of those things could have a significant impact on volatility and, of course, on the SPX and RUT. News certainly can drive the market. In my experience, though, news usually drives the market to a place it was going to go anyway. It will just drive it there faster. In other words, I fully expect, a pullback here, as already discussed, maybe down into this, 45.50 to 44.50 range. Now, that could happen just through normal drift over the next month or two, or if there was a volatility event, a news event, etc. It could move there in a day. But generally speaking, I find that when there's levels in the market, and the market is going to have kind of a magnet that pulls it to those levels. Whether it gets pulled to that level just naturally over a period of time or whether a news event drives it to that level, the levels oftentimes do have an impact. Of course, there's a little bit of art to that. They don't always adhere, as we saw in the run-ups where I expected a stall here. We did get a stall for a couple days, but then a massive breakthrough. I was expecting a stall and probably a reversal here. It stalled for a couple days, but then breakthrough and ran. So anyhow, that's kind of the take on where the markets are at right now at this point and what my expectations might be over the next couple weeks. So from there, I'm going to wrap this up, but do make sure that you look for a video coming out here probably within the next 2 to 5 days where I talk about the review from last year and we look at the possible changes that we're looking at going forward. And I think you'll like what you see there. So that's it for now. Take care, everyone. Have a great week.